Welcome to the deep dive. Today we are looking at a company that sits right at that intersection of Silicon Valley efficiency and the American healthcare system, Doximity. We are cracking open the transcript from their fiscal Q2 2026 earnings call, which was back on November 6th, 2025. And this deep dive, it isn't just about, reviewing the numbers. It's about understanding a fundamental AI-driven transformation that's radically changing how physicians work day to day, and maybe more importantly, how their clients, the pharmaceutical companies, spend their money.
That's really the key takeaway for you, our listener. We're not just looking at a successful quarter here. We're looking at a strategic blueprint. Our mission is to uncover three core things. First, the exceptional financial health and operating leverage that Doximity DOCS is the ticker reported. Second, the rapid, almost explosive adoption of their new AI tools by physicians. And third, this really significant strategic pivot in their sales model, a pivot that is smoothing out the volatility of their entire annual revenue cycle.
Okay, let's start with those financials, because they really do set the stage for everything else. This quarter was exceptionally strong. Q2 revenue came in at $169 million. That's 23% year-over-year growth. But the number that really jumps out is their adjusted EBITDA margin. It was just a phenomenal 60%, totaling $101 million.
That 60% margin, that's what we call massive operating leverage. For any growing tech platform, that level of profitability is nearly unheard of. It means the core business is incredibly capital efficient. And crucially, they beat the high end of their own guidance by a significant 15% on that EBITDA number. They also confirm the underlying engine is still strong. Net revenue retention, or NRR, is still very healthy at 118% on a trailing 12-month basis.
So just to clarify for our listeners, when we say NRR is 118%, that means their existing clients year over year are spending 18% more with Doximity. That kind of growth from your existing base just shows you have very high satisfaction and really sticky products.
Exactly. And that outperformance management was clear. It wasn't an accident. It was driven directly by the success of their, quote, AI-optimized integrated programs and the enhanced client portal. It suggests their AI investment is already paying off in, tangible financial dividends.
Okay, let's unpack that AI story then, starting with physician engagement. This is where you really see those network effects kick in. The Doximity newsfeed hit an all-time record for quarterly active prescribers, with double-digit growth in articles read, so doctors are clearly relying on this.
But the real action is in the workflow tools. We found that over 650,000 unique prescribers used a Doximity tool in Q2, and that includes everything from telehealth and scheduling to digital fax and, critically, the new AI tools. That's an all-time high for usage.
And the growth leader in that group was clearly the AI category.
Absolutely. The AI tools themselves saw quarterly active prescribers jump more than 50% just from the prior quarter. That is just staggering velocity. It signals that physicians are moving way past curiosity and are really integrating these AI capabilities into their daily routine.
Let's drill down on the specific tools, maybe starting with Doximity Dialer. This is their telehealth platform. It's now conducting over 300,000 voice and video visits on an average weekday. That's a big jump from the 200,000 visits they announced before. It really shows the scale they're operating at.
And that scale is important because it creates a massive funnel for their efficiency tools. Where there's a patient encounter, there's administrative work. And that brings us to Doximity Scribe, their HIPAA-compliant ambient note-taking tool. This thing goes right after the biggest complaint from modern doctors, the documentation burden.
And the numbers seem to confirm the demand. The number of quarterly active Scribe users nearly tripled versus Q1. The value proposition here is just so clear. It's solving the pain of the infamous pajama time.
That's right. For those who aren't familiar, pajama time is the term doctors use for the hours they spend after they've left the office, often late into the night. Just catching up on charting and patient notes, it's a huge source of burnout.
The anecdote they shared on the call just illustrates this perfectly. A family medicine doctor said, and I'm quoting here, "I just love Scribe. I saw 22 patients today till 5 p.m. and was out of the office by 5:15.
That is efficiency measured in quality of life.
That efficiency gain is huge. It shows Doximity is tackling physician fatigue, which in turn increases network loyalty. But they aren't just stopping at documentation, they're simultaneously going after the core knowledge base of medical reference, which brings us to Pathway.
Let's move to the pure AI heavy lifting. So they acquired a company called Pathway, and in only 7 weeks, they had fully integrated its entire medical data set into Docs GPT. It was live across web and mobile. 7 weeks from acquisition to live product. It shows this is like a top priority for them. It does. But let's ask a critical question here. If they integrated it that fast, are there risks? We've heard other LLMs claim medical accuracy. If they're pushing adoption over monetization right now, isn't there a risk that this deep integration could actually slow down future development? I mean, maintaining that kind of integrated knowledge base is complex.
That's a fair point, but management seems totally convinced the payoff is worth it. They're claiming this rapid integration gives Doxgpt two critical firsts in medical AI, which directly challenges their competitors on accuracy and depth.
So the first is the integrated drug reference. Doxgpt provides peer-reviewed answers to drug questions, dosing, side effects, interactions almost instantly in under a second. That speed and accuracy are just non-negotiable in medicine.
And why is that integrated reference so vital compared to, say, a general LLM like a GPT-4?
It's all about avoiding the hallucinations we keep hearing about. A general LLM might, generate a plausible sounding but completely incorrect answer about drug dosing because it's trained on the whole internet. By integrating a fully vetted, peer-reviewed drug reference directly into the AI's response, like a guardrail, they ensure the foundational facts are accurate, which is essential for a doctor making real-time clinical decisions.
And the second first is about the depth of evidence. Doximity claims to be the first medical AI to provide direct, full-text PDF access to over 2,000 medical journals, including the top ones. And they do this through a referral with a company called Research Solutions.
This is a massive benefit for the end user, for the doctor. It just eliminates the traditional headache of fighting with library proxies or different logins or hard paywalls. They can go from asking a question to reading the full original source in just a few clicks. It gives them a huge advantage over smaller competitors who might only have access to, a handful of old journals.
And management seems really confident about this. They said side-by-side studies show they are winning decisively on the quality and depth of answers.
Confident enough that they are not actively monetizing the pathway integration or even the core Doxgpt features yet. They're prioritizing the physician experience and adoption first, which, again, is a luxury you have when your core business is already so robust and profitable.
Okay, so we've covered the product innovation, we've covered the strong financials. Now let's pivot to what we think is the most structural news from the call. This core strategic shift that impacts their whole business model, the transition to AI-optimized integrated programs. This is fundamentally changing how they sell to pharma clients.
This is where the story gets really interesting for future predictability. Historically, pharmaceutical companies, their biggest clients, operated on a very uneven buying cycle. We've talked about the budget flush before. It's where these big HCP advertisers would cram huge upsell decisions into the last 2 or 3 months of the calendar year.
We've tracked that volatility for years. It creates these boom or bust quarters, especially at year-end. It makes forward guidance tricky for management and creates a lot of uncertainty for investors.
Right, and that volatility is being systematically taken apart by these new integrated programs. These are dynamic, AI-optimized solutions that typically run for a full 12 months, often starting in January. And this has totally changed the sales mix. These integrated solutions were over 40% of Q2 upsell bookings last year in the same quarter, less than 5%.
40% versus less than 5%. That's not an evolution, that's a structural revolution in their sales strategy. So how does this new model get rid of that old Q4 budget spike?
It's all driven by data and conviction. The integrated programs, combined with the immediate visibility from their client portal, allow customers to deploy those upsell dollars earlier and more consistently. They're not waiting until the end of the year to see what's left over. They're spending over 4 to 6 months because they can track the ROI in real time.
And that client portal is the key, isn't it? It gives customers the confidence to spend earlier. Management said the portal's quarterly active client users are up 3x year over year. And crucially, the number of ROI studies shown to clients is up over 10 times what it was before the portal.
That immediate data-driven feedback is transformative. Before, a client might buy a big campaign and get a summary report at the end of the year. Now that they can log in, see the return on investment month to month, and adjust their strategy. When you have 10 times more ROI visibility, you don't need to wait until September to make big annual decisions. You're comfortable deploying capital earlier.
So this shift resulted in a stronger than typical Q2, but management did sort of caution that it makes the Q3 comparison a bit challenging. Some of that spending that used to be crammed into Q4 has now been pulled forward, but the overall back half growth rate for calendar 2025 is still solid at 14% year over year.
The long-term vision is clear. These integrated programs will become the vast majority of their business. It's driven by higher client returns and, for Doximity, much better predictability.
Now, despite all this internal strength, the call did touch on some broader market dynamics and policy uncertainty that's impacting budgets for calendar year 2026.
Yes, there are some policy headwinds, particularly around direct-to-consumer, or D2C, advertising. Management noted the current administration has sent warning and cease and desist letters to some brands. This is confusing the market a bit because the DTC ad agencies are often totally separate from the HCP ad agencies that Doximity usually works with.
And that uncertainty is causing clients to be a bit cautious about their 2026 budgets. But Doximity seems well positioned to maybe court those D2C brands to shift their money from mass market ads to their targeted professional platform.
They also highlighted some potential policy tailwinds. Specifically, they talked about the Trump RX, which is the most favored nation pricing initiative.
So what's the implication of MFN pricing for Doximity's business?
Management sees it as a potential net positive for healthcare access. The idea is that it could cut out middlemen, reduce markups, and potentially expand access to important drugs, like GLP-1s, the weight loss and diabetes drugs, to Medicare and Medicaid patients. If more patients can get high-value drugs, the overall market for promoting and educating doctors about them naturally gets bigger.
And aside from pharma, their other growth areas look strong. Let's touch on health systems. This covers over 300 health systems, representing something like 45% of all U.S. physicians. And, crucially, we learned that top health systems have already purchased the new AI suite.
That detail is really vital. It shows trust in Doximity's platform for handling protected health information, PHI, in these new AI tools. That's a major regulatory hurdle they've clearly passed. Plus, their recruiting solutions like Curative saw 25% year-over-year growth in Q2.
And let's not forget the small and medium-sized business segment. That segment saw roughly 100% year-over-year growth in Q2 bookings.
That's just tremendous growth, and it's credited largely to their agency partnership program. That now has over a dozen partners. This program lets smaller clients, the ones without huge marketing teams, leverage the platform and, importantly, all that ROI data from the client portal. It really democratizes access to measurable returns.
Okay, and finally, just quickly on the competitive landscape, we should acknowledge the competition for physician mindshare is getting more intense. Doximity mentioned ongoing litigation with a firm called Open Evidence, and their strategy of touting exclusive access to historical content from journals like the New England Journal of Medicine and JAMA.
Right, but Doximity's counter to that is pretty effective. They just stress their access to over 2,000 journals through the pathway integration. Their argument is basically that doctors need current and comprehensive information to practice medicine today, not just exclusive rights to a few famous journals from decades ago.
And on the investment outlook, while they expect R&D expenses to go up in the back half of the year to power these AI solutions, so they are spending aggressively, management is still extremely confident in maintaining a 55% plus adjusted EBITDA margin long term. They have the financial firepower to invest without killing their profitability.
So what does this all mean for you? The core synthesis is that Doximity is leveraging its huge locked-in physician network and its amazing financials to become a clear leader in medical AI with tools like Doxgpt and Scribe. This innovation, in turn, is enabling a highly profitable and predictable shift away from those volatile year-end sales towards consistent, data-driven, AI-optimized programs.
That structural shift is really the big story here. The move to these AI-optimized integrated programs fundamentally links a marketing investment directly to measurable monthly ROI data. So if ROI visibility is up 10 times and the spending model becomes the industry standard, here's a final provocative thought for you to consider. What happens to the roles and the traditional influence of the thousands of pharmaceutical sales reps who have historically relied on human relationships and in-person calls rather than automated, measurable, data-driven optimization? The data is changing the sales game in healthcare, and that has massive implications.